When I first wrote The Power of Zero in 2013, it elicited a strongly negative critique from the white coat investor, emergency room doctor turned financial guru, James Dahl. He insisted that the types of doctors and dentists to whom he routinely dispensed advice were horrible candidates for my strategy. Why forego a deduction at their highest marginal tax bracket, which at the time was 39.6%, when their tax bracket is likely to be much lower in retirement when they'll be living on much less income? Now, there was only one problem with the white coat investor's critique of The Power of Zero. I never actually made this recommendation in the book. In fact, I tend to agree with his position that high-income earners should not make contributions to tax-free vehicles like Roth IRAs and Roth 401ks. What he failed to recognize is that the Power of Zero strategy is intended for middle-class income earners who at the time were in the 25 and 28% tax brackets. Today, those brackets are even lower at 22 and 24%. I and a number of other leading experts such as Ed Slott, Tom Hegna, Van Miller believe that people who are in these middle income tax brackets are the ideal candidates for the Power of Zero approach. They should be systematically repositioning any assets above and beyond the ideal balances in their tax-deferred buckets to tax-free. What is the ideal balance? If you don't have a pension or other residual income, the ideal balance is $350,000 if you're married and half that amount if you're single. If you have a substantial pension, your ideal balance is zero. Take advantage of these historically low tax rates while they're on sale to get any surplus assets repositioned to Roth IRAs and cash value life insurance so that by the time tax rates rise dramatically over time, you have done all the heavy lifting, you can take those dollars out 100% tax-free. But what about people in those high income tax brackets? Don't they deserve tax-free wealth as well? Folks, I get pretty nervous telling high-income earners to forego the tax deduction at today's rates based on the idea that they'll be in a higher tax bracket much further down the road. Think about folks in high-income tax states like California, New York, or Minnesota. You're giving up 37%, plus up to 13% for state tax, potentially throwing another 3.8% for the Obamacare surcharge. So you'd be foregoing a total 50% plus deduction today, banking on the prospect that you'd be at an even higher tax bracket in the future when your income is likely to be much lower. I totally understand why high income earners would be reluctant to adopt this approach. So, when the white coat investor made this critique, he clearly hadn't read The Power of Zero very closely. It's a classic case of reading your own preconceived notions into the text. Had he read my book closely, he would have seen that every example I gave was based on the 25% tax bracket, what would be the 22% tax bracket at today's tax rates. In short, the Power of Zero strategy is specifically targeted at middle income America, not high income earners in the upper income brackets. By the way, the white coat investor has since come around when it comes to tax-free strategies such as the Roth conversion. In fact, when Joe Biden was running for president in 2019 and he released his tax proposal, here's how the white coat investor responded. Quote, "These proposals read like a war on investors. Let's see, losing long-term capital gains brackets, small business taxes raised, no more step-up basis, real estate investors hit, and energy investors hit. Tax what you want to see less of. If these were passed, I think I do a huge Roth conversion," close quote. So he even suggested that if Joe Biden got elected, he would be tempted to convert his entire IRA to Roth all in 1 year. That, of course, would have pushed the white coat investor into his own highest marginal tax bracket and cost him a substantial portion of his IRA to tax. And as you can probably imagine, this isn't even a recommendation I would make myself. When I congratulated him on coming around, he promptly blocked me. So, two conclusions we can draw from today's video. First, contrary to what the white coat investor claims, I don't think a full-blown Power of Zero strategy is necessarily appropriate for people in tax brackets such as the 32, 35, or 37, or their future equivalents. I think they're much better off getting the deduction today. And the second conclusion I draw is that even huge tax-free skeptics like the white coat investor are coming around to my way of thinking. They're beginning to recognize that we are in fact in a rising tax rate environment, and where it didn't previously make sense to preemptively pay a tax on their retirement savings by executing a Roth conversion, they're beginning to see the writing on the wall and are coming over into my camp. And if the likes of the white coat investor are starting to embrace my strategies, then I think that's a pretty good vindication of the Power of Zero worldview. Folks, in the next 10 years, I'm looking to put 100,000 Americans on the road to the 0% tax bracket in retirement. If you'd like some help getting on the road to a tax-free retirement, be sure to check out my tax-free toolkit. You can download it for free at taxfreetoolkit.com. PowerZero.com. If you're a financial professional and want to learn how to become a certified PowerZero advisor, head over to PowerZero.com and opt into my free 3-part video series. By the way, if you have any comments or questions, feel free to drop them into the comment section below. I respond to every single one of them personally. And don't forget to click like, subscribe, and the bell so you never miss a video. This is David McKnight. I look forward to seeing you on the next video.